Hello, it is Wednesday, the 20th of February, 2008, and this is Brian Shannon from Alpha Trend speaking. The market's closed, and we had a pretty decent session here today. The market initially gapped lower and came right down to that 134 level we've been watching, but wasn't able to hold below that for more than just a couple trades you see here. And the market then held that level, and buyers figured that since it didn't break down on bad news, nothing was going to make it go down, so they came in and bought this market up. So it puts it back into the middle of this range that we've been looking at recently, and looking at the 30-minute time frame here. You see it's still within the confines of this symmetrical triangle we've been looking at, but it's right up near the upper end of it again. So now we've got to take a look once again at this 137.20 level as the level of resistance that's been holding this market back in the short term, and if it makes it above that, then this market will have a higher high on the daily time frame. So making a higher high could put this market put some pressure, that is, on the short sellers, and maybe we'll get a run up towards this 140 level. One thing's for sure, we've got a lot of volatility in this market, and that's why you've got to be an aggressive trader in this type of environment. Bear markets are typically more volatile than you would see in a bull market, and we'll just, if you stay focused on these key levels and don't stay married to a belief too long that, for instance, that the market's going to or has to break down or do anything, then flexibility is your ally in this type of environment. So 134 remains the key level. We saw that held once again today along this trend line as well, and below that we've got 132, which looms. So for now, it's kind of back to more neutral than anything. We've got this 5-day moving average. It's pretty much flatlined in here, so that's not giving us any telltale as far as what the immediate direction is going to be. But the market's pretty resilient in here. I guess it's shaking off what should be viewed as negative news, and able to hold up and not break below those key levels of support. So maintain an eye on the levels of support and resistance, and trade accordingly to what you see in there. The semiconductors have been also tracing out this symmetrical triangle that we've been looking at, and they're still within the pretty much the midpoint of this range. It's nice to see, I guess, from a short-term standpoint, that the apparent breakdown at 28.50. The market did make that lower low yesterday, and then came back up today, and is back towards that 5-day moving average. I think right now you got to keep an eye on this little downtrend line and the about 29.75 level. That's where we would breach this high and make a higher high. Again, though, the primary trend is still lower. So as good as it is to see these rallies develop, you have to remember that they're in the context of an overall downtrend, and sellers remain in control in this environment. So the odds still don't favor much in the way of follow-through to the upside when we see rallies. The IWM still hasn't broken this trend line that we've been monitoring, and you can see that the range continues to tighten in here. And today the IWM finished with a 4-cent gain. Looking at the 30-minute time frame, you can see that intraday it poked down below that for about 30 seconds, but still really no convincing breakdown below that level or below any of these other levels of support that we've been looking at. For instance, about the 67.75 or so, and here's that trend line once again on the 10-minute time frame, where you can see that it still has not broken down in this head and shoulders pattern that we're looking at. For now, if this market can get back above 71, then I think that the shorts could get squeezed a little bit in here, and that's going to be the key level of short-term resistance. But then again, we've got potential for further resistance near this trend line, and of course the bigger level of significance here is at $73 a share. So we've got that 50-day moving average right here as well. And, a lot of times we see maybe a day or two, like we did in here, where the market gets above that declining 50-day moving average. But the key thing to remember here is what's the direction of that moving average? Not where is it in relation to it, but the 50-day moving average is heading lower. You generally want to look at the daily trends as guilty till proven innocent, similar to the way we use the 5-day moving average on the intermediate term time frame. And this 5-day moving average is pretty much in here also flatlined, which tells us there's really no real conviction from buyers or sellers right now, so it's time to go slow in here and wait for a movement in either direction. Being early can be costly, as people found out. Yesterday I was looking at possibly buying this the TWM, the inverse double inverse Russell 2000 fund, and I was outlining in here the inverted head and shoulders pattern, as we saw the IWM had the head and shoulders topping formation, it looked like. But again, this trend line has been valid, and it's not the breaking of a trend line that matters so much. Breaking a trend line doesn't really lead to reversals. What leads to reversals is, first of all, a lot of times we do get a trend line break first, but then we need to see a higher high as well. And the market didn't make that higher high in here for the TWM. I was looking at this trade early today, and it looked like it had a chance as it got above that daily VWAP. But pretty much all day long, the buyers regained control of the market late in the day here. And at this point, I had posted a couple charts to my blog, pointing to the strength in the S&P 500 right here, and the Nasdaq 100. Also, when it rallied above the daily VWAP convincingly with volume. So this market is giving us a lot of mixed signals. The Nasdaq 100 continues also to tighten within the coiling of this symmetrical triangle, and maybe we get one more move up towards the top end of that range. But again, the primary trend is lower. Odds favor resumption of the trend once this pattern has broken, and we look at the 30-minute time frame. You can see that trend line is down here near about 42.60 now, and as far as the upper boundaries, up at about 44.5 or so. 44.5 also would potentially create that. Well, it would create this higher high here in the short term. That might lead to a little bit of a squeeze rally. The key level that we've been looking at for support in here recently has been this 43.50. We saw that it broke yesterday, and I said, maybe we're going to see a rally back up towards that 5-day moving average. It looked like maybe we're going to sell off this morning, but now we've got it rallied up to the declining 5-day moving average, so it's real tough to believe in any strength that we see here, even though the market did finish with a 0.5% gain today. Still just a lot of indecision in this market, mixed messages from multiple time frames, and remains a time to be very cautious due to the overall declining nature of this market.